Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services and another divorce mortgage planning video quick tip. As we all know, not every self-employed borrower will qualify under traditional mortgage guidelines. When conventional or government financing isn't an option, non-traditional documentation methods such as bank statements, asset depletion, and other alternative income solutions may provide a path forward. These options can make the difference between a loan approval or denial. In today's post, I will discuss how alternative self-employment documentation works, when it may be needed, and why proper divorce mortgage planning is critical to ensuring settlement agreements remain enforceable. But remember, our free second opinion service is available to both attorneys and homeowners. If a self-employed borrower is struggling to qualify, our team can review the details and provide guidance on alternative solutions that may help keep the process on track. When divorce involves a homeowner who meets the required self-employment history but doesn't qualify under traditional income documentation, it can be unclear where to turn. Tax returns may not show enough income to meet lender requirements, even when the client's cash flow tells a different story. Self-employed borrowers often face qualifying challenges due to issues such as tax return income versus cash flow, where business deductions and write-offs suppress taxable income. Full income documentation requirements, such as conventional and government programs under USDA, VA, and FHA. And timing disruptions, when divorce has interrupted income patterns, especially if a business was divided, restructured, or ownership has changed. In these cases, understanding alternative documentation loan options becomes essential. Program options such as bank statement, 1099, and asset depletion loans can allow a self-employed client to refinance or purchase while staying compliant with the marital settlement agreement. Common alternative income documentation solutions include bank statement programs, which use 12 to 24 months of business or personal statements to calculate qualifying income. This can be helpful when cash flow is strong, but taxable income has been reduced through deductions. 1099 income programs, designed for independent contractors and sole proprietors, primarily paid via 1099. Qualification is based on recent 1099 income averages. Asset depletion programs provide for the ability to convert verified liquid assets into qualifying income. This can be especially useful in higher net worth settlements, where one party receives substantial assets instead of monthly support. And please note, program availability and terms vary. Early coordination with a certified divorce lending professional helps match the documentation path to the client's timeline and the MSA. Proper divorce mortgage planning is often the make or break factor for loan approval and can directly influence settlement negotiations. Partnering early with a CDLP helps family law attorneys understand available mortgage options and further support the settlement process. And remember, work with a team that understands both mortgages and divorce. At Metroplex Mortgage Services, our divorce lending practice group works alongside family law attorneys to draft lender compliant settlement terms, preserve client eligibility for equity buyouts, maximize equity and available loan options, provide expert insight on credit qualifying, income analysis, and loan requirements. Whether you're drafting the MSA or troubleshooting post-decree financing, we can help ensure mortgage eligibility aligns with settlement intent. If your client intends to keep the home, early planning makes all the difference. Contact us to review options, assess qualifying limits, and ensure enforceable mortgage compliant terms. And to our valued family law partners, thank you for the continued referrals and the trust you place in our divorce lending practice group. We're proud to serve as your partner for navigating mortgage-related issues during divorce. And on a scheduling note, we're currently coordinating in-office and virtual presentations for Florida family law firms. Each session is customized to address equity buyout refinance planning, purchase options and down payment requirements, credit scores and debt-to-income ratios, and how to structure enforceable mortgage-related provisions. Just contact my office today to reserve your preferred date. And as always, I want everyone to make it a great day and look forward to seeing you right here for the next Divorce Mortgage Planning Video Quick Tip.